Can you really make money on the stock market without being a pro? Welcome to Wealth Rise, where we help you build a stronger financial future. In today's episode, we're tackling an important question that's on the minds of many. Can you really make money on the stock market without being a pro? The answer may surprise you, and we're going to dive into practical, beginner-friendly strategies that can help you navigate the stock market and start building wealth, even if you're not a financial expert. Before we jump into the details, don't forget to like, share, comment, and subscribe to the Wealth Rise channel. Your support means the world to us and helps us continue to create valuable content that empowers you to take control of your financial future. Can you really make money on the stock market without being a pro? The basics. Understanding the stock market. Before diving into how you can make money, let's take a quick look at the stock market itself. The stock market is where investors buy and sell shares of companies, allowing businesses to raise capital and giving individuals a chance to own a piece of those companies. When you buy a stock, you're essentially buying a small share of ownership in that company. The hidden potential. Many people think the stock market is reserved only for seasoned investors, but that's a misconception. The truth is that everyday people like you can also make money by investing in stocks. While you don't need to be a professional trader or have a financial background, there are strategies that can help you navigate the market with confidence. The solution. Start with the basics. It's essential to understand the fundamental concepts of stock investing. Terms like dividends, capital gains, and market orders might seem confusing at first, but you don't need to be an expert to begin investing. Take time to read up on stock market terminology and learn how the market works. Many websites, books, and even online courses offer free resources to help you get started. Use stock market simulators. A great way to dip your toes into the stock market without risking real money is by using stock market simulators. Platforms like Investopedia Stock Simulator or How the Market Works let you practice trading with virtual money so you can get a feel for how the market works before committing any of your own cash. Once you've got a basic understanding, you can move on to more advanced strategies. But remember, even experienced investors started by learning the fundamentals. Number 1, long-term investing. The power of patience. One of the easiest and most effective ways to make money on the stock market without being a pro is through long-term investing. This strategy focuses on holding onto your investments for an extended period, usually several years or even decades, allowing your investments to grow over time. The hidden cost of trading too frequently. Many new investors make the mistake of trying to time the market, buying and selling stocks quickly in hopes of making a quick profit. While this can sometimes work, it's often a risky strategy that can lead to significant losses. Market fluctuations happen daily, and trying to predict short-term movements is nearly impossible, even for professional traders. The solution. Buy and hold. Rather than trying to make quick profits, focus on buying solid, stable stocks and holding them for the long term. Look for companies with consistent growth and strong fundamentals. Companies in sectors like technology, healthcare, and consumer goods often make great candidates for long-term investments. Invest in index funds and ETFs. If you're not sure which individual stocks to buy, consider investing in index funds or exchange-traded funds, ETFs. These funds allow you to invest in a broad range of companies, which reduces the risk of putting all your eggs in one basket. Index funds and ETFs are typically less volatile than individual stocks, making them an excellent choice for beginner investors. Take advantage of compound interest. The longer you hold onto your investments, the more time they have to grow. Thanks to compound interest, your earnings begin to generate additional earnings, which accelerates your wealth building. The key to maximizing compound interest is patience and consistency. By focusing on long-term investing, you'll avoid the stress of trying to time the market and position yourself for steady growth over time. Number 2, dollar cost averaging, DCA, consistency over perfection. One of the most effective strategies for beginner investors is dollar cost averaging, DCA. DCA involves investing a fixed amount of money into a particular stock or fund at regular intervals, whether the market is up or down. This strategy removes the guesswork from investing and helps you avoid trying to time the market perfectly. The hidden cost of trying to time the market. Many people believe that in order to make money on the stock market, they need to predict the exact right time to buy and sell. Unfortunately, this is a difficult and often unsuccessful strategy, even for the most experienced investors. Trying to time the market can lead to missed opportunities or buying and selling at the wrong times. The solution: set a fixed amount to invest. With dollar cost averaging, you invest a set amount of money into stocks or funds every month, no matter what the market is doing. For example, if you set aside $100 per month for investing, you'll buy stocks at different price points over time, reducing the risk of investing all your money when the market is high. Reduce emotional decision-making. Dollar cost averaging helps take emotions out of investing. Instead of reacting to market ups and downs, you stick to your investment plan and stay focused on your long-term goals. This helps you stay disciplined, even when the market is volatile. Benefit from market fluctuations. Since you're investing a fixed amount regularly, you'll automatically buy more shares when prices are low and fewer shares when prices are high. Over time, this can lower your average cost per share and increase your chances of making a profit when the market eventually rises. Dollar cost averaging is an easy-to-implement strategy that can help you build wealth steadily without having to be an expert in the stock market. Number 3, dividend stocks, earning money while you wait. Another excellent way to make money on the stock market without being a pro is by investing in dividend stocks. Dividend stocks are shares of companies that pay out a portion of their earnings to shareholders on a regular basis, typically quarterly or annually. The hidden cost of ignoring dividends. Many investors focus solely on capital gains, the money you make from selling stocks at a higher price than you bought them. While capital gains can certainly make you money, dividend stocks offer the additional benefit of passive income. Ignoring dividend-paying stocks can cause you to miss out on a reliable and consistent income stream. The solution: invest in dividend stocks. Look for companies with a solid history of paying dividends. Many large, well-established companies, such as Coca-Cola, Johnson & Johnson, and Procter & Gamble, are known for their reliable dividend payouts. Reinvest your dividends. Rather than cashing out your dividends, consider reinvesting them into additional shares of stock. This strategy, known as dividend reinvestment, helps you accumulate more shares over time and increases the power of compound growth. Focus on dividend yield and stability. When selecting dividend stocks, pay attention to the dividend yield, the percentage of your investment that the company pays out in dividends, and the stability of the company's payouts. A high dividend yield can be attractive, but it's important to choose companies with a reliable history of paying dividends over the long term. By investing in dividend stocks, you can generate passive income while you wait for your stock investments to appreciate, giving you the best of both worlds. Number 4, keep fees and costs low. The impact of fees on your returns. One often overlooked factor when investing in the stock market is the impact of fees. Whether you're paying commission fees on trades, management fees for mutual funds, or transaction costs for buying and selling stocks, these fees can eat into your returns over time. The hidden cost of high fees. Even small fees can add up over time and significantly reduce your long-term returns. For example, an investment fund with a 1% annual management fee may not seem like much, but over 20 or 30 years, that fee can take a sizable chunk out of your portfolio. The solution: choose low-cost investment vehicles. To minimize fees, consider low-cost investment options like index funds or ETFs. These funds typically have much lower management fees than actively managed funds, and they also offer broad diversification, which can reduce your risk. Use commission-free platforms. Many online brokers, such as Robinhood, Fidelity, and Charles Schwab, offer commission-free trading. This means you won't have to pay a fee every time you buy or sell stocks, which can save you money over time. Watch out for hidden fees. Be cautious of fees that aren't immediately obvious, such as account maintenance fees or excessive trading fees. Always read the fine print and compare fees across different platforms and investment products to ensure you're getting the best deal. By keeping fees and costs low, you'll maximize your investment returns and avoid unnecessary expenses. 5. Stay educated and keep learning. Making money on the stock market isn't about luck, it's about education and strategy. The more you learn, the better equipped you'll be to make informed investment decisions. The hidden cost of ignoring education. One of the biggest mistakes new investors make is jumping into the stock market without understanding the risks or strategies. This can lead to poor decisions and lost money. The stock market can be unpredictable, but having a solid knowledge base helps you navigate it more confidently. The solution: read books and articles. There are countless resources available to help you learn about investing. Start with books like The Intelligent Investor by Benjamin Graham or Common Stocks and Uncommon Profits by Philip Fisher. These books offer timeless wisdom about the principles of successful investing. Take online courses. Websites like Coursera and Udemy offer free and paid courses on investing and personal finance. Taking a few courses can deepen your understanding of the stock market and teach you new strategies. Follow experts and join communities. Stay up to date by following reputable financial experts and joining online investing communities. Sites like Reddit's r/investing and Seeking Alpha provide valuable insights from fellow investors and financial analysts. The more you learn, the better you'll become at making smart investment decisions that can help you grow your wealth over time. Conclusion: so can you really make money on the stock market without being a pro? Absolutely. By focusing on long-term investing, using strategies like dollar-cost averaging, investing in dividend stocks, minimizing fees, and continuing to educate yourself, you can successfully build wealth through the stock market, even if you're not a professional investor. If you found this episode helpful, make sure to like, share, and comment below. We'd love to hear your thoughts and experiences with investing in the stock market. And if you're new to the WealthRise community, don't forget to subscribe so you never miss an episode packed with tips and strategies to help you take control of your financial future. Thanks for watching, and we'll see you in the next episode.